Ladies and gentlemen, welcome back to the channel. As you know, AMC stock is falling like a rock thrown off of a cliff here today. Exactly why and what is going on? Well, not a whole lot of rhyme or reason to it. Like I said in the last video, hedge funds and institutions and even market makers and a lot of wealthy individuals are not the sharpest crayon in the crayon box, okay? They haven't used that sharpener on the back of the crayon box quite a long time, meaning they haven't used their brain in quite a long time. Now, AMC stock is artificially suppressed. You're seeing a lot of naked short selling. You're seeing a lot of synthetic shorts today. I will go out on a limb and I will say that. There's no justifiable logical reason that AMC stock is down 13%. If this is justified, well, hey, what do you think's about to happen in the broader markets? It could get ugly, and it could get ugly quickly. Hopefully not. Hopefully not. Let's be clear. Hopefully there is no bad situation in Israel. Hopefully Jamie Dimon today was just talking out of the poop chute and had nothing quantifiable or a reason behind what he said. But we're going to go over what he said. What this algorithm is predicting for AMC stock could be a surge of 500% or more, and give you the latest on this Israel situation. So we're going to get into it. Work's cut out for us here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section, guys. So first things first, I want to start with a little bit of good news for AMC, for the industry as a whole. Because, hey, I mean, on any normal day we get good news, AMC stock just falls 13%. That's just what seems to always happen. Quote, Taylor Swift, the Eras Tour boosting demand for cinema ads, says National Sin Media CEO. By James Rogers, a lot of brands feel safe being associated with Taylor Swift. The eagerly anticipated Taylor Swift The Eras Tour is driving huge demand for cinema ads, according to Tom Lazinski, CEO of National Sin Media, Inc. The in-theater advertising company says it has clinched deals with a host of big-name companies for cinema ads tied to the Taylor Swift movie. There are 32 new deals that we made for advertisers to be a part of the Eras Tour movie, he said, noting that these include Capital One Financial Corp, United Airline Holdings, State Farm Insurance, Burger King, and Mazda Motor Company, as well as major companies from the tech, telecom, pharmaceutical, video game, and retail sectors. Quote, this will be the biggest October thanks to Taylor Swift and National Sin Media history, Lazinski said. A lot of brands feel safe being associated with Taylor Swift. It's safe plus impactful. Cinema ads give advertisers valuable access to young people, according to Lazinski. The Sin Media has always been a young demographic. It's a coveted one. It's hard to reach, he said. Citing industry data, National Sin Media says this can reach 1 out of every 2 18 to 34-year-olds. Underlying the interest in the Taylor Swift movie, Lazinski noted that 12 of the 32 companies buying ads hadn't advertised in theaters since before the COVID-19 pandemic hit. Who knew that there were so many Swifties on Madison Avenue, he said. It's a bit of a dream scenario. I wish there was a Taylor Swift movie or something like it every month. So, yeah. This seems like a positive for AMC. Obviously, AMC takes a share of this ad revenue. Just like you just heard, half of advertisers that are advertising for this movie have not advertised since before the pandemic in movie theaters. So I think this is important to know. I think it's important to keep in mind. AMC stock's actually getting good news today. There's nothing bad that is scaring people out there. Now, in regards to the markets, what's actually going on out there? You can see NASDAQ's down about 1%. And AMC to be down 13% right now. Guys, something bad is coming. Let's just say it how it is. Something bad is coming. I don't even know where to start. So this Israel situation is what I think of first and foremost because it's the most relevant thing to right now that could affect the markets. Now, on a financial basis, Iran, about 30% of the oil flows through the Strait of Iran. If they wanted to cut that off, if we got into a conflict, if they wanted to retaliate in some way, they could make the price of gasoline go to $10, $15 a gallon. That would cause a deep, deep, deep recession. Could be a depression at that point. You know, a lot of people think we're going to see a depression. That's one way you could actually get one. Like, yeah, imagine that. If gas was $15 a gallon. Trust me, I ain't driving. I'll tell you that one right now. You literally just wouldn't be able to afford your credit card, your house, your car payment. Something would have to go at that point. Something would have to go. That would add hundreds of dollars to your energy bill a month on top of everything else people are facing. That would be very bad. That's the thing that I think of has a direct financial implication for this conflict. And yeah, AMC stocks down 14%, NASDAQ down over 1%, and AMC's actually getting good news today. The news that we just went over. So that is a little bit on the frightening side, okay? Like we said in the last video as well, your 1 and 5 year inflation expectations came in much higher than expectations. Your 5-year inflation expectations were expected at 2.7%. Now they are 3%. Your 1-year inflation expectations were expected at 3.1%. Now they are 3.8%. This should have had an effect on the bond market that caused yields to go higher. Yields are actually falling today. The 30-year yields are down about 8.5 basis points. 10-year treasury yields are down about 8 basis points. This is causing investors to actually go out and buy the bonds. This is not what should be happening today when you got higher than expected inflation from consumers over the next 1 to 5 years. Gold. I highlighted this in the last video as well. Gold, out of all things, is up almost 3% today. Gold goes up during fearful environments. Bonds go up, generally speaking, during fearful environments. Bonds are up 1.5%. Oil is up 3.29%. This is a total fear move, total risk off move. Panic is starting to set in. Now, in regards to what Jamie Dimon just said here today, well, let's give you guys the latest on that. So Jamie Dimon says, quote, talked about this in the last video as well, but we'll go ahead and reread this. It says, quote, the war in Ukraine, compounded by last week's attacks on Israel, may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships, Dimon said. This may be the most dangerous time the world has seen in decades. While we hope for the best, we prepare the firm for a broad range of outcomes. Huh? What the heck? What? Come on, don't say that. Okay? Just don't say that. That just sounds real bad. Now, the UN says Israel wants 1.1 million people in Gaza to move to the south in the next 24 hours. Israel's going to go in there. They're going to eradicate Hamas. Does that cause a save our people kind of moment? As Iran, as Lebanon, as even Jordan, neighboring Jordan, is Palestinian origin, Palestinian people essentially. Does that cause a retaliation? Does that cause some kind of, larger conflict? Hard to say, but again, Iran controls 30% of the oil that basically flows through their waterways. So if they wanted to, well, that could be a big problem. They could really cause a deep recession for the U.S. if they wanted to. That's just like if they wanted to. Do they want to? Probably. We're not even letting them get the $6 billion of funding that they have previously made from oil out of South Korea, which is now in Qatar. So yeah, there's an obvious financial impact here, but just the psychological aspect of fighting a multinational war, just does not sound great. And Israel actually just sent these flyers over Gaza telling them to evacuate. So there's going to be a huge humanitarian crisis. There's going to be huge loss of life. Again, the only question you should be asking yourself is, does this situation cause other countries to get involved? If it does not, things will probably go on as business as usual, essentially. But I mean, if it causes, a bigger problem, that would obviously be a big problem. Now, the U.S. has recently put its Gerald R. Ford strike group in the Mediterranean. Now, this is the most powerful strike group in the world. This thing is like 8 ships. It's basically unsinkable. They're like, this strike group has more firepower than most countries' entire militaries. The U.S., the Gerald R. Ford, is powered by nuclear power. It does not need to refuel for 20 to 30 years. It's using enriched uranium. just to put that out there. It doesn't even refuel. 20, 30 years it can stay out at sea. So I was wondering, like, how do you refuel one of these things? No, they don't refuel. Okay, it'll be 2054 by the time that motherfucker will have to refuel. Okay, you just don't want those kind of problems. Okay, you just don't. So I'm hopeful that's enough of a deterrent to keep someone like Iran away, to keep, other countries at bay, and hopefully that is the case. But right now, the markets do not seem that convinced that this is just going to be an Israel conflict. If I were to say so myself, this more so looks like Dookie could be hitting the fan very, very quickly. Now, let's go ahead and get into the situation with the Ortex data, run through these numbers, then we're going to look at this algorithm that is predicting a 500% surge in AMC stock. This is by 2024. So it says a short score of 58, $170.45 million worth of short positions currently in AMC stock. Estimated short interest off free float at 7.84%. Free float out on loan at 11.35%. Shares out on loan 22.44 million. Days to cover 1.3. You have cost to borrow of 1.94. Utilization of 47.05. If you take a look at the option activity, for whatever reason, it doesn't aggregate the option trades themselves anymore ever since the reverse split. But you can see the put to call ratio has fallen off of a cliff. This is the whole reason why I thought AMC was going to rally from $7 per share up to as high as, $30, $40, $50 per share. That's without even seeing shorts covering. That just wasn't factoring in shorts covering in that multi 100% rally that I thought was coming. So far, you had seen like 50% of a rally from $7 from the low, but not quite to where I think we can go nonetheless, guys. So there is that. Let's take a look at the cost of borrow fees briefly. If you look at cost of borrow fees, about 9% on the cost of borrow max, 1.5% on the cost of borrow average, cost of borrow minimum 1.47%. So that is important to point out. Now, let's get into this algorithm predicting AMC is going to rally 500% situation. So this says algorithm predicts 500% surge in AMC stock price by 2024, growing revenue to drive AMC's share price growth with a question mark. Key takeaways: AMC stock price rally by 25% in the last 5 days, setting a new monthly high above the $10 mark. In the same time frame, the S&P 500 grew by just a little more than 2%. Per algorithmic predictions, the stock of AMC could be primed for a 500% upswing in the next 12 months. Now, it goes on to say that the 1-year prediction is $61.40 per share, 6-month prediction of about $20 per share, 3-month prediction of $12.80 per share, and a 1-month prediction of about $9 per share. This is somewhat what they expect the chart to look like here, which honestly doesn't look too unrealistic, right? You've risen a little bit here. You kind of trade sideways and you kind of fall a little bit, probably back down to about $8 per share. You rise again to about 19, almost 20, kind of what I expect. You fall a little bit more. We kind of go through a little bit deeper of a crash, and then you really start to make upside moves. By 2024, by the end of 2024, AMC stock $60 or more. That sure actually looks like a reasonable prediction from an algorithm. That's something that could actually happen. It says, speaking from the fundamental analysis standpoint, AMC hasn't turned a profit since 2019, recording 4 straight years of losses. Still, the AMC stock price reached an all-time high of more than $230 during the same time frame. Despite the COVID-19 pandemic that severely affected global moviegoer audiences, the reasons for the unusual market behavior can be attributed to the fact AMC is considered a meme stock. These stocks have gained sudden popularity in recent years on the internet, which has led to sky-high prices and unusually high trading volumes. It says, it is worth noting that predictions produced by algorithms can provide helpful insight, but they should be used alongside different types of analysis when deciding to buy AMC stock or any other kind of financial instrument for that matter. So obviously, don't just go ahead and buy the stock based off of this algorithm's prediction, but I think this is in line with a lot of our predictions as well. $60, $600, what's the difference here? I mean, that's point is the stock's probably going to rally big time from here. Now, when and for what reason, why, how, those are all questions we don't exactly know right now. As of right now, AMC stock is down about 14% today. And there's actually good news. So, again, hedge funds, institutions, they're not the brightest crayons in the crayon box. So you really have to, take their moves with a big grain of salt, guys. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video. Holy moly, someone has an attitude this morning. That's it. You guys enjoy the rest of your day, and I will see you in the next one.